All right, perfect. So I'm so excited to have this interview, even though I am not an insurance broker. I've never sold it. I just know how incredibly mind blown I was when I first dove into this, and how it started for me. My insurance journey was, we got the mortgage for the house, and however many years later, speaking with one of my massage clients, um, I learned that, so let's say you get your mortgage for like $400,000, and you have your life insurance for the $400,000 of the mortgage. I don't know if it's the same in the States, but literally we cannot get a mortgage in Canada without having life insurance to back it up.
Okay.
So it is a must. And normally, and easiest, is you get it through the lender that gives you the mortgage, and it's just coupled, it's one big payment, and you don't have to worry about it. Sounds great, right? And then I found out, so for this $400,000 life insurance policy, that, let's say 5-10 years down the road, where our house only has 250,000 left owing on the mortgage, God forbid someone did pass, there's an extra $150,000 of life insurance money that we don't get. The lender keeps that. So this was, I was like, when I first learned about this, I was like, what? Like, that's my money, but it's not, because it's all in the fine print we never read, because who reads fine print? And if you don't know about your insurances, you don't know there's another way. So that was kind of how I kickstarted my journey. And then I actually went to a mortgage broker, like building with people and like you that do this for a living. And my education was many months. I got a binder, like
Oh, great.
It was, for all my Canadians watching, it was Cooperators, and this was in Morinville, Alberta. They are amazing. Like, she was like, okay, here's your plan. And I don't know, for us coaches, we have the roadmaps. We always have roadmaps. So she gave me my little pyramid roadmap. Here's where we start. We move here. This is the end game. And I was like, dang, like what? So it was very informative. We'll get into more of that later, but that's how I started my journey. Just for anyone wondering, what the heck is this stress and anxiety coach doing talking about insurance? It is so important, and you want to talk stress and anxiety, talk about finding out you are being ripped off of $150,000. God forbid if your spouse passes, your house is paid off, but now you're out money that should be yours had you the proper person and the proper insurance. Big deal. So anyway, I'm going to get you to introduce yourself. Tell us about how you got into the insurance world, and basically what you do for all the wonderful people out there.
Yeah, sure. Thank you. So my name is Caitlyn. My company is Absorb Financial Group. I started it about 4 years ago. Grew up on the East Coast, and I've been out in California almost the last, I think, 9 years now. And so just throughout that time, I've just been growing my company. I'm actually back on the East Coast now, starting to grow it out here in the tri-state, the DMV area. And yeah, I wanted to link up with Sandra because I just saw that she had a platform and saw that she was around kind of the same idea of stress and anxiety, and how can we alleviate that in life. And my whole purpose is to bring peace to families. With life insurance, that's one of the many things that I'm licensed to do. But with life insurance, that is a way to bring peace to yourself, because if something does happen, then your family doesn't have to scramble. They don't have to mourn you and receive a financial devastation too. So really a few things in life, a couple, at least two that I can remember of life-threatening incidences that happened to me personally, kind of led me to this way. A few things in 07, 08 with my dad, with the financial crisis here in the States, like that led me to it as well. There's been many things that are kind of brought me over here. And now I'm just really passionate about helping people grow their wealth in a very safe way, and not doing it any sort of a risky way, but also not giving you returns like 2-3% like CDs. So I kind of do it in a holistic way, where if I can save you money in one area and bring it over, we can just invest more for you, and your future is just brighter from that. So
Well, and I love that because so many people don't understand that we can actually grow our money through insurance policies. Like they just hear
Yeah.
insurance and they think like, I don't know. I feel like there's some sort of like tie with almost like car salesmen and lawyers and like, oh, you're just an
I can
insurance
see that.
broker,
Yeah.
right? And it's so funny because in my little journey of learning all this, like I love my insurance broker in Canada. She is amazing. I was almost looking for excuses to go see her because I'm like, how can you help me more?
Oh,
And so I would like, I don't know if there's a ton of different types of insurance, but I would like to kind of also start with kind of listing out different areas. So in Canada, I know in the States you guys have the Obamacare, but the healthcare is different for sure. In Canada, we have our free, not free because it's tax funded healthcare. And that is basically you go to the hospitals, you go to your doctors, this is all paid for and covered. But we need benefits on top of that. Drugs are not covered, dentist is not covered. There's all of these like prescriptions are never covered. So there's a lot we don't get covered. And then massage, chiro, like mental health therapies, none of that's covered. They do have some government resources, but God help you, like it's 8 months to get into them. So you might as well pretend they're not even there. So we always have to have through our employers, we get benefits, which covers all these extras for us.
oh, okay.
Vision, stuff like that. Yeah. It's basically if you literally don't have to see a doctor in an office or go to the hospital, you're not covered. You have to pay out of pocket. So we need extra benefits. And so I've been self-employed for most of my life now. And so I did not realize this, where I can get through my insurance broker, I got benefit coverage and a disability. I was massage therapist. So like if I broke my arm, I'm not working for a couple months. So
Yeah.
it was, for me, it ended up being $30 a month. And I had $4,000 a month coverage in case I, needed disability because of. I hope you guys can still hear me. And so there, I know that there's all this extra insurance, even from the getting your own disability, your own like kind of benefits coverage, all the way up to the actual life insurance. And then in Canada, we have a term policy versus a whole policy. So I guess give us kind of a list of especially things people might not know exist that could be very helpful for them.
Yeah. So first thing that comes to mind, you're talking about work provided benefits. Although it's amazing and definitely take what you can get. It's imperative to know that you don't own that. So if you no longer work for them, if you find a better opportunity, or maybe they liquidate or anything like that, they can take those away from you. So let's say you're like, I'm covered, I got life insurance. When you leave, that does not transfer to you. Now, if you're an executive and they made a special deal where you're the owner and they're the payer, like that's something different. But the typical people, you just don't own it. So I implore you to please, like it. Even if you're sending it to an agent, just say review this. Just even find out, if you're the owner or not, even if you're unsure. So that's one thing. You mentioned on disability, and because of being licensed and as a broker in so many areas, I sat down and I reviewed and basically compared. I was like, all right, what's good, what's not, and for different scenarios. Of course, disability, it's wonderful, but a lot of life insurance policies actually have it in there where you would even get more than you would in an actual full-on disability policy. And for cheaper as well. So just to give you a bit of an example, I want to say he was 46, but I know he was in his 40s, year old man. And he came to me, he was paying $184 a month for disability. And I was able to save him all of that by signing it up with a life insurance, and it just came with it. So that's something that's important to note as well, is like maybe you could save money, and not have life insurance so expensive. And then the 184 we actually took and we were able to roll into something that we were investing behind the scenes with life insurance. So we were able to save in one way, like I kind of mentioned, and then throw it into a retirement cash accumulation policy. So then that way it really is working for him, and it's not a typical account where, I know for 401ks, IRAs, and things like that, It's tax deferred. And with life insurance, we use the tax codes in our favor, and we're able to have it tax free whenever we're retiring. So we're a little tricky with it, but it's 100% legal, and this is what literally the banks do, and this is what the wealthy do. We're just a little slow to catching up. So, but yes, so we've can do disability, we can do long-term care. And again, long-term care, I've weighed the options against an IUL, which is an index universal life insurance policy. And I've weighed the options there too. And the disability type of riders that come in these policies, they overweigh any long-term care benefits as well. Long-term care, you don't use it, you lose it. It does not go to your family. And if you need more than the set amount of, say, 3 years that you signed up for, that's too bad. Whereas with the IUL, you've got that amount of money, and typically it is much more than what the long-term care would ever allow you to put in. So we talked on that. And then for term, whole life, and IUL are the 3 life insurance that we do. And I'm not going to bash or praise any one. It really is just based off of your situation. I mean, if you've, like Sandra was mentioning, a mortgage, well, I wouldn't want to design an IUL for you that has a crazy high life insurance benefit, because then it wouldn't really be doing much for you for the cash accumulation part. We want that part to grow best for you. That's the whole point, is to get that money tax free. But the terms are amazing. We can do it for the term of your mortgage. And the difference, where I was learning this morning with Sandra, is the difference in the US is whenever you purchase the term. Let's say your home was $500,000 and you purchased a term for $500,000 in 10 years, even though your home is paid down for that amount of time. That just means, okay, well, if you were to pass away, say on the anniversary, the 10th year and first day, your spouse would still be able to pay off that remainder of the mortgage and get a chunk of change to be able to help with anything else. So it would be, say, funeral arrangements, car debts, medical debts, if that's maybe the reason you passed away. Or they could take it and invest it. I mean, there's no guidelines on what they can do with the money, but just kind of thinking smartly in the financial realm, pay off your home would be the best thing. But it's not required. So that's kind of where it sounds like the difference with Canada and Virginia and United States policies kind of differ there.
I think now if you get your insurance through your mortgage lender, then they just pay it off for you and it's all said and done. Now, if you get it on the side through a broker, we are the same in the fact that, let's say my boyfriend had passed or whatever, that money comes to me, and then I need to pay the mortgage off. But it is to, cover my butt. But then when I would go, let's say I didn't pay the mortgage off, when I go to renew, I still need a life insurance policy on myself to cover that mortgage. So you don't necessarily have to pay it off. But like you said, who would want to live in a paid off house? And that's the other thing is, even, I learned from my mortgage broker how expensive funerals are. Because let's face it, none of us ever want to ask that question, whether a grandparent passes away or a loved one of a friend, or even someone we know, unless we're dealing with that. Nobody wants to talk about it. It's this faux pas. They are so expensive. I have heard people that have had to literally take out loans just to bury a loved one. And I'm like, that sounds like the worst thing in the world. Yeah. And I know for my boyfriend and I want to say our mortgage was $340,000 when we first got it on our house years and years ago. And we each got, when we did our own life insurance, once we were educated, we each got $400,000, because I was thinking the other thing is, funerals are costly. What else can you pay off? Get rid of debts perhaps. But the last thing I want to worry about having my partner pass is, when do I have to go back to work to feed myself?
Yes,
you need to have, right? So just to work that into when you're thinking of how much money do I want to insure people for, which again, people feel, oh, I'm jinxing, this is morbid. How can I think this way about a loved one? But this just allows you to take time to grieve. It allows you to get your life in order. I can't imagine being in the throes of grief and all of a sudden having to be thrust back to work and trying to do a job and right. So
And it's inevitable, right? Like no one is guaranteed to stay here. I'm not a single person, right? And so it behooves you to plan for your family. A common term or saying, I guess, goes for life insurance is it's love insurance. Yes, of course, these conversations are very uncomfortable, but at the same time, what's more uncomfortable truly is your loved one having to lose their home because they can't pay for it and lose their job because they just can't make themselves show up. And there's actually a pretty staggering stat. So 44%, and this is typically with females. Males tend to pass away just from the dangerous jobs and their lower life expectancy. But 44% of now single mothers end up losing their home in the first 3 months that their spouse passes away. And if you end up having children, you understand that the zip code that you're in dictates the children's school and everything else. So not only would their life be uprooted because they lost that special main person in their life, now they don't have the same home. Now they're not in the same school or the same friends. It's just a complete uproot to people's lives. And to your point in saying about people feeling they'll jinx it, the kind of the go-to thing that I say is like, oh, do you think that you're going to get in a car accident for getting car insurance then? It's like, no, please, like this is for the worst case scenario. This is for just in case. And if you do, then thank God you planned ahead. Other than that, I mean, your family would be in a crappy situation, but there's actually been scenarios where people go over and beyond even off of paying mortgage. They'll say, I want X amount of years of what my annual income is. And so they'll go even more to pay for that because they're like, just throwing out a scenario. My wife has been a stay-at-home mom. That's what she's been focusing on. She won't even know where to start for any sort of career. And she wasn't interested in it, but this is the cards that life dealt. And so that gives her time to be able to take care of the kids more, be able to go back to college, and all do that with still thanking her husband, from the grave, unfortunately, but still being able to thank him for that one last gift.
And I love that, calling it love insurance, because that right there, what says love more than thinking of like, God forbid something happens to me, yeah, I'm still taking care of you because I love you so much. Like yeah. I love that. And that is so true because people, again, we don't want to think about it. So we don't think of these things of you have children, the house, the bills, like the utilities never stop. You can't pay those off, unfortunately.
Yes.
And food. And 44%, that is crazy. Like that is astounding. I had no idea.
And just to cut you off for just one more stat with it, it increases to 90% after a year has gone by because people people do have savings and they've got retirement accounts and they start to pull from that and everything. But after a year, 90% of people that end up being single parents they just can't make it anymore.
How about that?
I'm sorry.
Oh, sorry. I just said, how about that? Like, it's just about if you don't have proper life insurance, you are almost guaranteed to lose your home. Like that is crazy.
Yeah. And especially in today's day and age, I mean, like we've all seen the last couple of years, things raise so much that it's like, you thought it would be hard before, even a couple of decades before you thought, oh, there's no way I could do this. Well, now we really can't fathom that. So it's definitely imperative to plan for it. And the typical person actually thinks life insurance is 3 times more than it is. I've had so many people be like, wait, hold on. That's really how much it is. Like, you're not pulling my leg. And so it's nice to just have the conversations.
Yep. You know what? And that was the same thing because you always hear about like whole life insurance and how expensive it is. And honestly, it's really not. And this is actually the perfect transition into the younger you are to get into this, obviously, the better. So like what do we pay? We pay about $200 a month for my boyfriend and I, and we got our insurance in our 30s. I can't remember when in our insurance. We've just crossed the 40s threshold. And we've had our life insurance for quite a long time. So I'm going to say early to mid 30s is when we got it. And yeah, we pay about $200 a month and we each have 400,000. So I tell you, like if both of us were, God forbid, to pass, whoever inherits our stuff is getting a payday, let me tell you. So yeah, it's really not as crazy as people. And again, that's whole term. We're building money, and you can kind of talk about this after where, just a side note of that building the money. So I know we had the $400,000 policy, which we're guaranteed. Our payment is, we have a 20-year term for payment. It's always there. But when she did the charts of current growth, which changes the economy, yada, yada, after 20 years, we were going to have about, I think it was something like $580,000 set aside for us. So in our 20 years of payments, it was going to grow $180,000 of what I like to consider free money, which again, nobody has to die. We can pull out at any time. That can be our retirement, yada, yada. So I guess let's talk about those beautiful investment opportunities and maybe get a little more descriptive so we can really get people excited about that part of it.
Sure. Yeah. Hey, I can nerd out on this as much as you want. This is one of my favorite policies to put together for people because, like you mentioned, the younger the better. So even being able to put a newborn in something like this, don't think of it as the death benefit. Like that's what you're getting it for. You're getting it not just to help them for later in life, but also yourself for, say, first car, college. You don't even have to tell them. And at age 30, you can say, here's your down payment for your first home based off of a small amount that you put in for them. But yeah, speaking on, I mean, at any point you can create something like this. Now, granted, they have to vet you basically, making sure that your health is okay, your hobbies, you're not some fighter pilot that, does crazy things or, and if you are, you could still get qualified, but they have certain, parameters that they work around. And basically, you can design it front, back, forward. Like it just depends on what works for you. But typically people will go front to back on what I can afford, what is in the budget. And then that's how we plan it. And then by the end, I do want to clear up, you were saying a 20-year term that you're paying in. And what she's saying for anyone listening is that the term is a non-permanent policy. But what she's saying is 20 years in her policy, she's paying into for the permanent policy, and then she can stop paying and then start taking the rewards after. So yeah. Yeah,
it's not a term policy.
Yeah. It's a permanent policy, which is usually about until age 120. They put it pretty far out there just because, people don't usually last that long.
And then just to interject, because I can't remember this far back when I got it, I believe we had different, like it's similar to a mortgage where we could pay 25 years. I think there was different variety, and that would depend our payments per month also. If I'm correct, am I correct in saying that?
There is so many ways to design it. Yeah. And it's so flexible too. So it's not like, if you decide now, you're like, I have 20 years left in my mortgage, but maybe later you do a HELOC or you do something else and your mortgage changes, or you just have extra money. You don't end up stopping working at 65 or, what you thought your goal was. You can still keep putting money into it. It's not like you have to stop at that particular time. And it works the other way around. If you feel you put enough and you don't want to put any more, you can stop at years earlier as well. So it's not like it's, this solid plan. I know whole life specifically is different than an IUL. Whole life is more strict. So if you're looking at flexible payments or flexible periods of years that you put into it, that would be correct. That one is more strict. Now with the IULs, the monthly can vary as well as the period of time that you're putting into it. But the great thing about IULs, if I had to compare whole life and IULs, whole life would really be for the older individuals who can't really get approved for much else. It's usually going to be a smaller amount really to really just cover the funeral expenses, not really anything like a mortgage. And it still will be more expensive. They're just higher fees along with it because the insurance companies are taking on a higher liability. So that's all is what I'll say with the whole life. With IULs, there's less fees involved, and the way that we structure it is actually kind of similar to a mortgage. If you think about it, how it's split between the interest payment and your principal. This IUL policy, that monthly premium you're putting in is going to be between the cash value, which is the growth of the policy, and the death benefit. So if you think about it, the higher the death benefit, the less it has to fund the cash value. So we want to design it to where the death benefit is as low as you could possibly get it. And that is where the beauty of being a broker comes in, because not all companies have the same products. And so some IULs, although they're wonderful companies, nothing wrong with the company at all, the life insurance calculation to get you to what your base death benefit is, that can start at, say, 150,000 or 200,000, whereas other companies, they start at 50,000. So obviously I would like to pay, say, a quarter less into the death benefit because I have my term on the side, and that's so much cheaper, and it's so much more money involved with that one. So you get to play around with it quite a bit, and you can kind of design your future based off of that. And just like how you said, the roadmap, and you can see your charts on what it looks like 20, 30 years down the line, and how it looks like for you for retirement. We do very modest charts with that. So even though we're getting averages between 8 and 11%, we're not showing 8 and 11%. We want to, under promise and over deliver. We want to make you happy and not have anyone angry coming at us. So we don't show it that high. We show like 6 to 7% in our illustrations. And so even then, when we're showing it, we're like, but just think, like, you see what you're seeing now, accumulation. I mean, that's compounding. That's the eighth wonder of the world. So it's amazing how it starts to really, really add up on itself, and just as time goes.
Well, and that's true. And it's so funny because I've tried to do this compounding interest before. And just to clarify, I am, or used to be, really good at math. Like throughout school, I was always 90s honor math kid. And even this compounding interest, I'm scratching my head and I'm like, whatever, this is for professionals. I'm not even touching it. So this is, and this is a great point, I think, just to stress how important it is to get a good broker. We might think we know, and you can go on, and especially, I don't know about the States, I assume this is global. I can log on and get car insurance in about 5 minutes online, never talk to a human, just read some yada yadas and think I know, and I don't. And so I don't know about life insurances. I don't know all the different avenues for people to get them. Like I said, with us, we got our mortgage, like the life insurance for our mortgage, through the lender, not knowing anything about it. Someone just said, this is easy, I can do it for you, don't worry about it. And of course, who's going to say no? Because we don't know any better. And so, this is why we're doing this. So now y'all know better. So don't waste your money. And I'll say again, how much we were paying similar. Okay, I will amend this. The term policy, because when we get the life insurance for the mortgage, it's always a term policy, which for people listening, there's no growth, there's no money accumulation. I cannot cash it in. I am literally paying a bill and it's going to
just
waste.
like anything like car insurance. You don't expect money back. It doesn't grow any cash, anything like that.
Exactly. So that's what I was paying on. And when we went to the insurance broker, the term policy they could give us there was so much cheaper. And we could keep all the money. God forbid we actually had to use it. So it's astounding the different ways we are, I'll just say, swindled out of our money, and we have no idea. And let's be real, in this economy, we need all the money we can get. So be smart, talk to people. And again, this is where people like you come in. It's not like you/me, the consumer, has to know these things. We just have to be educated enough to know that you know them.
Well, and to give your lender the benefit of the doubt as well, they might have not been a broker. They might have thought, my product is the best product I can give you, and this is here that is. So it's not even to say that there was any nefarious intent behind it. It's just that they don't know. And being a broker, I will tell you, there is a lot to know, sometimes too much. But in that event, you yourself, you don't have to call around and spend the hours and hours trying to understand the differences and the different riders of which one goes with where. That is my job. That's what I get paid for. So knowing that is very powerful. But I'm so glad that you had the conversations and that you changed it, because a lot of people think, no, I already have it. I'm good to go. I don't need a review. I got what I needed. And sometimes I'll speak with people during reviews and I'll ask them, well, why did you get this specific amount? And they don't even know why. They said, oh, that's what they were able to offer, or that's the max that they could give me, or, what have you. So as I'm sitting down, I'm actually finding out that since then, even though they didn't know, but now since then they've had a kid or they've gotten a mortgage. So even if it did make sense for them back in the day, this review was so helpful because now they know, oh, I needed to update it anyways. And so we work with people with reviews that already have it, that just, they're just unsure. And really great thing about it too is not every single person I can help. Sometimes there's people that are in the absolute best thing that they can be in. And now they have peace of mind from a secondhand, unbiased. Obviously, I would like to make a commission, but if I'm telling you you're in something good, you've got to feel good about that. So we love to do reviews for people and be able to help them in that way. But when it comes to that cash accumulation, that's where a lot of people just don't know about it. The most popular thing I kind of tell people is the government markets and demands of businesses what they get to profit and benefit from. And they don't get to benefit from IULs because of the tax codes written in it. And so they are not shouting about it from the rooftops. They're not requiring small employees or businesses or large businesses to create this. They get nothing out of it. So I've been working with CPAs. I've been trying to find a way how to make this an employee benefit within defined benefit plans and all of the ways that they can actually use taxes on their side before with the plan and after. And there is a way. You just have to ask and you have to dig.
Yes. And I think, you know what, this is so important because to know what your employer is giving you. Because even if we hear stories of other people, to what you said, like every employer is different. Everyone will have a different, I'm going to say everything in their contracts and stuff. And the big thing is, well, for example, a year and a half ago, my boyfriend's brother, was an iron worker, and he died at work. A very freak accident. And through his company and through the Ontario, we would call them WCB, and it was all taken care of through that. He did not have any extra policies on him, to what I understand. And the payout from his death for his kids was incredibly lower than I ever would have imagined, to put that number of what a father's life is worth. And I was very shocked at how low it was. And I was like, okay, that is eye-opening. And I will say eye-opening in a number of ways of, what the benefit of, that money going towards the kids, things they might need, who knows, for their future that he will no longer be able to provide, like college funds, etc. But also eye-opening to, like, unfortunately, he was mid-30s when he passed. Like, we just don't know. This is a Bible. And again, no one likes to talk about it. It's a Debbie Downer subject. But the fact is, accidents happen, and to be prepared for them. Like, again, to the car insurance, no one's looking for a car accident. I hope not. And nobody wants to get in one. But if again, you do get in one, you're just like, oh, thank God I have insurance. I don't have to pay out of pocket. But no one wants to think. So again, it's just, no one's looking for it. No one wants it to happen. Ideally, we never really use it, but life can happen.
And a lot of people see material items and think, man, I don't want to have to work so hard to get that material item again, which I obviously completely understand. But at the same time, your income, your life is not replaceable. That would be the one thing that you need to ensure, because you can always get another car, you can always get another phone or a ring or whatever else the case may be. But your life isn't. And speaking on your example, you said it was your brother-in-law.
Yeah.
So with your brother-in-law, he did have coverage through work, and thankfully he was still working there and he had it, but they won't have it specified to you and your specific needs of your family. So a lot of times, specifically with nurses, I'll hear, "Oh, I have life insurance. I'm great. I'm good to go." And they'll give about $50,000 for each of the nurses. So $50,000 would cover a funeral and maybe pay off the rest of their car if you wanted to keep their car or something like that. But it won't actually take care of anything else. It won't take care of the family. And I know we've been talking about men more because they have more dangerous jobs. Their life expectancy, unfortunately, just isn't as long as ours is. But they actually did a study this last year, and they calculated up how much a stay-at-home mom would end up making if they had to fractionally basically get employees for each of those different jobs the mom did. And it was over $200,000 a year if they actually had to pay someone to do everything that the mom did. So in saying that, many times I see, say the breadwinner or the husband, he's the one who ends up getting the life insurance. He's already naturally in that caretaker protector role. So I think just naturally they end up getting it more. Whereas the mom, they're like, no, I'm good. Like I always hear I'm just a mom whenever they, talk about what they do. And it is not the case. I mean, please, I really want to change that, the stereotype around that, because your job is invaluable. And if you really want to put a monetary value to it, it's over $200,000 a year. So in saying that, if your husband lost you, not only does he now still have to go to work, but figure out all the things of the household that you do. And all of you mamas know how much you do. Y'all are multitasker queens. So, that's something to think about as well, as it's not just your husband's responsibility to set you guys up. It's both ways. We're partners in this life. So please think about that as well for a growing family, or just, having your own to be able to take care of your husband. Now, let's say that your scenario is you don't want kids, or you're older and you're empty nesters. Just thinking about your husband alone, or say your partner alone, that's still valuable as well. Because if I had lost my husband, I would want to know I could take as many months off that I need, and I'm not forced back into society and having to deal with everything. And then where Sandra comes in, having to deal with the anxiety of all of that. I mean, I just cannot imagine. So it helps in so many ways. And I think that these conversations are so awesome, because it's not just this dull, dim light on it. It's like, no, you love them so much. You're willing to have this, kind of weird what if scenario situation, conversation with me for a while, but you also have the growth of your money aspect to it. So, whenever I go and see, of course, every coach needs a coach too. So whenever I go and see my financial advisor, I am not thinking, oh man, what is he going to tell me? What am I doing wrong? It's, I want to grow more. What do I need to do? So it should be something exciting. Taking care of your family, taking care of your future can be an exciting thing.
Yeah. And that's exactly how I felt. Like I said, I was looking at my little pyramid of what I need to get to be covered for everything. And I felt so great coming out of the appointments with her, because I'm like, oh my God, like anything can happen. And I'm just so covered. I felt almost bubble wrapped, like, yeah, right. And I'm just like, this is amazing, because no matter what, I wouldn't have to worry about things. So yeah, it really is something, I'm going to say, take it the right way for what it is, in protection, and get excited about it. Because I know I was, and this was, long time ago for the most part. And the other thing too is just another quick story. My mom, it was my grandma's best friend back in the day. My grandma passed away when I was 14, so she was quite young. And so my mom, we always called, my mom's German, so Tante. She was her Tante, and she was super, super old school, but she did not know how to pay bills. Like literally, she was a homemaker. She did not touch money ever.
Her role.
Right, yeah. Exactly. And so when her husband passed, she was literally lost. And my mom had to step in, because all her friends and her English was good, but she had her, she was, oh my goodness, was she in her 70s maybe? And think about being this elderly grandma who you already have your community, you're not making more friends for the most part. And she was so alone because it was her and her husband. She just stayed at home, provided for him. That was her life. And now he's gone, and she just knew nothing. So my mom had to go to the banks with her, had to literally be by her side and get all of this done. And thank God my mom had the time. But let's say this is one of your grandparents or great grandparents, and who's going to be there, 6, 8 hours a day taking care of her, finding her. She needs a new place to live now because maybe the place they're living in is, I believe they were renting. And so anyway, it was a big mess. We ended up finding her a beautiful home to stay in and all these things, but she literally needed hand holding the entire step of the way. And so even just to think about, like, if your family just does not have time, because I hear that a ton, even for like 15 years, people are so busy, they don't have time to handhold an elderly person in their life. You're going to have to hire someone. You're going to have to hire people to do this. And all of those people are going to cost money. And even for her, like, it was, if you don't have time to, she didn't drive. Now we're hiring taxis or car services to drive her places. Like, there's so many situations we just don't think about that are just,
you're in it.
Exactly. So it's just kind of like sitting down and, talking to people like you, get the family situation. And that, like, my insurance broker, that's kind of what we did, was like, okay, who do you have in your life? Who might need what could happen? And run through all these situations in, again, not a dark way, but let's get that bubble wrap where you can feel good and sleep peacefully at night, knowing all your bases.
It's to avoid the dark, the extra dark that could be avoidable. And to add to your scenario as well, because, any one of these examples could spark in someone, right? And so I kind of want to cover a little of each. We've talked about parents, we've talked about spouses, elderly, and I also want to talk about younger people. So people over 18 that really don't quite have a spouse or a home or too much responsibilities yet as well. What I hear a lot is, I don't need to worry about that. When I'm dead and gone, who cares? They're not thinking of who has to carry that burden. And when I do meet with people, I do ask, like, is there anyone in your life where you'll have to foot that bill? Well, that you'll have to foot the funeral bill. And if so, get me in touch with them, because
sorry, just side note, because what is last I heard, which was years ago, the average funeral was like $10,000 or something. Do you remember? Do you know?
So cremations are cheaper. It really depends on your preferences, of course, like if you want, like, what type of urn and all this other stuff. Urn, sorry. And I'm seeing that anywhere right now between 6,000 to 8,000, and regular funerals anywhere from 15,000 to 20,000 now. And I have a personal testament, actually. So our babushka, which is grandma in Russian, she passed away a couple years ago. And, we've kind of been going back and forth about the headstone and everything. Well, we're finally pulling the trigger on it. And I want to say 3 summers ago, it was about $1,200 for the stone, the foundation, all of that. We're paying $4,100 for the headstone alone right now. We didn't make any changes. There's nothing fancy about it. It is just your generic headstone. And that alone, just to mark them in their grave, is, and of course, I'm sure that varies throughout the country. But ours is $4,100 right now. And so, that's not including the food and the celebration of life and the venue and the casket and the lot and
the flowers.
The flowers. If people can't afford to fly out there and you want them there as a family member, like that's, and I know plenty of people that don't have a credit card. Doesn't make sense to me, but they don't. And so they can't even put that on a card in order to even fly to you. So having these extra funds just for, say, that situation alone is really, that's really powerful in a way, as a gift to say thank you to your family as well. Like, hey, I thought ahead of this. And so going back to somebody who's younger, who's like, oh, I don't need that. Like, I won't have to worry about it because I'll be dead and gone. That someone else can worry about it. That someone else is your family. That someone else is your family creating a GoFundMe, which typically do not get funded. Or it goes out of their savings that they could have used to retire. Don't be selfish, please. They have these conversations. And the younger you are, like Sandra mentioned, Oh my gosh, it is incredibly cheap. So, you think, oh, I can't afford it. I don't have $100 a month. Well, guess what? It's not going to be, unless if you really want to focus on retirement or something like that, it really will not be. And if we do have a little bit more time, I wanted to talk about one more product, if that's okay.
Yep. Yep.
Yeah. Okay. So it actually is a combination of two. So many people haven't heard of like a conversion or a partial conversion, but typically it starts with a term policy. So let's say you get a 30-year term. Let's say you just bought a brand new home, and oh, you know about it?
I think this is ringing a bell.
Oh, good. Okay. So let's just say a scenario. You got the home, you got 30 years, which is, the term of the home. And let's say, you only had enough at the moment because you just got that house, you just did that, put all that money aside. Let's say you just had enough to pay for the term. Now, since those are cheaper and they don't cash accumulate, they're much cheaper for a higher death benefit. That's great. Well, in a couple of years, well, the feeling and the burden of just purchasing that home is no longer on you. A couple of years have passed. You may have also gotten a promotion or things like that. So now you're ready to start investing. Well, you can take a portion of that and you can switch that into an IUL, and so you can still have that really low death benefit, and then you could be just throwing as much money as you possibly can into it, and you can actually put an incredible amount more than what you can put in the regulated 401ks and IRAs and things like that. It's not there's no cap like there are with them. So you can now say create that IUL and still have the other big portion for cheap for the term product. And the really cool thing about it is that your health is of what you did all those years prior. So you don't have to do another underwriting. It's just taking that, being like, now we're ready to move to another product. It doesn't matter that I'm older and maybe have more issues or anything like that. And so it's just multifactorial. It's very cool how you can kind of customize it the way that you need it.
Yeah, and I believe, if I remember correctly, my broker telling me something to the effect of, as long as we had the policy and we were paying and it was active, we could increase it at any time and never have to do the underwriting, the checkups, the yada yada. We'd keep our base like what we went in at. Something to that extent, where there's these little tiny loopholes that we can kind of get it on.
So that is actually a very special product that you're in then, because typically carriers do not offer that. Typically the way it goes is if they'll give you the option of decreasing. So if, let's say you get the term product for your mortgage, and as the years go on, your mortgage obviously lessens. And so you're like, oh, well, I want to lessen my monthly amount of what I'm paying in as well. So you can lessen the term. Typically they don't let you increase, because typically your age, the higher liability. I mean, not to be morbid, but closer to death that you would be, Yeah. And you're the healthiest you're ever going to be right now, as far as you know, and as far as the insurance company knows as well. So that's why it works like that. So Sandra, you have a wonderful policy. you were able to get into a really great product that they had offered at the time.
Well, I will say to all my Canadian people watching, I might be remembering incorrectly. Maybe this was switching from term to whole and pulling that over like you just described. Maybe. So definitely don't take my word for it. It has been many years since I've been educated in this field. So I want to say that was correct, but maybe not. So yeah, again, just double check. Again, this is why we have brokers, to inform us and let us know what's going on.
Oh, sorry.
No, go ahead.
So you are right. So for example, Prime America, they're known for selling mainly just term. They do have an increasing one like that. I actually just had someone reach out to me, and every year they could increase their death benefit 10% for 10 years. Now, granted, that would increase their monthly amount around 10% as well. But the difference is Prime America, they're not brokers. So then there's, you only have their products, and their products, I've looked at, are anywhere from 11 to 29% more expensive. So even though you get that option, there's different routes that you can go down, and maybe Prime America would end up being the best one, but just being able to compare is really important.
Yes. Yeah. Which again is why you have the broker, because just like car insurance, if you just go into one place, find out their product only, and you don't price compare with other places, you just don't know. And the other thing I think is important too is also, and we did this with our car insurance, we did this with our life insurance, is just to make sure to ask your broker, what's the ratings? Are these people easy to work with? Like, are they good? Because I know I'm with cooperators, like I said, in Morinville, Alberta, and they are wonderful. And when I talk to people and you Google them, my connection. Okay. I think we're back. I think I lost you for just a moment. My internet is being weird for whatever reason.
You're back.
Perfect. But yeah, so cooperators is really, really excellent for customers. They treat their people really well. I've heard they're not necessarily the best to work for. I'm assuming that goes by different branches, perhaps. I don't know the inside world of that. But even just to, understand that how easy, because even with car insurance, I know there was certain companies that would do everything and anything to not pay. I know it's different than life insurance, but just how user friendly are they? How easily can you contact them? Are they open for appointments easily? Do they only work Friday mornings and you can never get in to see them? Like,
Right.
Just even obviously rates are good. Product is really, really essential, but that little side note of, are you easy to get payments from, like a disability payment, or are you jumping through hoops like a car insurance company that's trying to find like, oh, well, you turned left 4 blocks black, so we're not paying you, or whatever.
Find you at fault for any little reason. Yeah.
Exactly. Well, I guess that's more of a house insurance issue, but another story. But yeah, just to make sure to get all that information, because the last thing you need is to have this beautiful, wonderful product and be, so secure, and then find it's a little extra stress and a little extra to try and get that, let's say, disability payment. And just to make sure, again, maybe the disabilities, the life insurances, they're kind of easy for everyone. I'm not sure. I've never had to cash in on it. But just to make sure, again, we want to sleep easy at night. We want to know that it's just there if we need it to stay.
Yeah. And you actually just made me think of 2 other things. So when it comes to travelers who are coming to the United States, we have, as long as you have an ITIN number, we can help you out. So because not every carrier does, but because I have access to dozens of them, I know which ones do. And so if you're here and you're like, hey, I just moved here, I'm not completely permanent yet, still waiting on my paperwork, or whatever the case may be, we can get that for you. And I've actually verified, even if, let's say, plans fail and you end up going back home, it doesn't matter. The whole purpose was the intent. The intent was for you to be here and to be a citizen. And if that didn't end up working out for you, you still are covered. Of course, as long as you're paying into it, but yes, you would still be covered. So even, let's say, 20 years down the line, you die of a ripe old age of 80, and you happen the policy ended at 81, you would still get paid out even if you're in another country. So that's helpful to know.
That is super helpful, because just because there are a ton of Canadians moving to the States, like for the past couple years,
yes,
tons of Canadians moving. So that is very helpful to know.
Yes. It seems, the migration of people are coming from all over. And so, if you are applying for paperwork and things like that, it would be helpful, because you do have family that you're leaving behind, and you have an unstable, an unsure future ahead, and so that's something that, again, with term, it is so cheap, something that you can just be covered for. And then you did mention, not sure of the kind of the guidelines or stipulations on like the disability portions of your life insurance policy. So every carrier has something different. I work with carriers that have typically a higher payout. So anywhere from 80% to 100% of your death benefit. So let's just throw out an example. Let's say you have a $500,000 term. Let's say you get sick next year and you can't work for 4 months. Well, the doctor, everything, is kind of clear in their system, and the insurance company, you sign paperwork for them to be able to see that. And they see, oh man, yeah, you can't work for longer than the 90 days that we have written down for our guidelines. So here, you can access your death benefit early while you're alive. You can take this money and be able to use it to pay bills and not have to have stress on that. You don't have to pay that back. Disability does not mean you're dying or anything like that. Now, there are specific riders with different guidelines. So they have critical, chronic, and terminal illness. So terminal is, the expectancy to pass away. And again, they just speak with your doctor. And if they're like, okay, yeah, everything that you're saying is checking out, they'll write you a check and you'll be able to access that. So I'm not saying that you have to use it for anything serious. You don't technically have to use it for bills. You can go and spend it all at the casino if you want. Hopefully you don't. Hopefully you help your family. But
we don't recommend that.
Yeah, but it's up to you. And so the beauty of that is being able to not leave your family with just all these medical bills and all of these worries. It's to help you while you're here too. So the life insurance that doesn't offer those things is typically a few dollars more cheaper a month. And then the ones that do offer it is a little bit more expensive. But compare a couple dollars more a month to the example I said earlier, the gentleman paying $184 just alone for disability insurance. That's a big deal. So definitely compare and find a broker that will do a financial review, because if they don't know your entire situation, there's no way that they can accurately give you any advice on what you should really do. So if they're asking a ton of questions, that's a good thing.
Perfect. That is such a good point to make. And especially, you think just how sick people have gotten, and just with everything going around, and oh my goodness, not to be again dark, but like our cancer rate is something like 60% or something. Like it's huge. So there's so many things going on and nobody ever knows. So just again, to have that coverage, that protection, that nice little bubble wrapping of it's okay if something happens. We will all be okay. So,
yes.
And I know we're kind of almost close to time, but I did actually just want to touch on, I want people to understand how important it can be and how incredibly affordable for life insurance on babies. Like, I know people are like, they get really put off, but the way in Canada, one of my massage clients, she was an insurance broker, and she was talking about all of her kids have life insurance like within the first month, yada, yada. And how it was an educational fund. To your point, it's the down payment on a house. But she said it was something ridiculous, like $5 a month, because they were just newborns. And because you get the policy when you get it for the, 20, 30, whatever you're paying into it, it's always $5. So
yes, to kind of give a little more detail to that, if you started off as a term and you do it for them, it can be so cheap. And then you could do the partial transition whenever you're ready, or the conversion whenever you're ready and you have more funds. I would always say for kids, just start off with the IUL anyways, just so you don't have to remember and you don't have to do all of that. For the IUL, because it's a hybrid policy, right? So you have the disability long-term care, you have the life insurance, you have the cash accumulation. So because of that, there's a few things it's funding. So I would say $25. Start with that with a newborn, and it is the gift that keeps on giving, because not only does it help you, to be able to pay for a first car and things like that. It's like the 529 plan on steroids. And even once they turn 18 and you're like, hey, you can go ahead and you can be the one that's paying into it. You have started their retirement plan like 30 years before the typical person does. And that's where you really see the compounding working for it, because when they retire for that tiny little measly $25 or $50 a month, that ends up being millions for them, literally just because of the 30 years in advance that they had versus us starting, at age 30 or whatever age. So I would say it is way beyond just helping you be able to pay for funds for them. But God forbid something does happen, or there is a disability or some sort of accident that happens, that's covered, because of course you're emotional, you're missing work from doctor appointments and things like that. So that's already taken care of if that situation were to arise. But you're also helping literally your grandkids, because let's say nothing happens, it's a perfect world, and your child gets to 80, 85 and they pass away. Well, that account still has a death benefit to pay their children and their beneficiaries. So really, you putting a small amount aside, people are going to be thanking you for eons.
I was just going to say, not that we're talking about, but speaking of creating generational wealth,
Yeah. Yes. To that point, many people think they can only do it on their child. People do it on their grandchildren. They do it on their nieces and nephews. I've even had an individual do it on their siblings' kids because they knew that their sibling wasn't doing anything for their children. So, I mean, as long as, you know, there's of course certain stipulations, you have to know their social and who their doctor is and stuff. But other than that, I mean, you can help someone beyond yourself for a lot cheaper and be able to help your family out too.
Yeah, and I just want to also clarify because a lot of Canadians, we have it's called an RSEP. So
Okay.
instead of a retirement savings, it's an educational fund. And I had one of my clients, and she had this educational fund, RESP, I think it's called, set up for her by her parents, thinking they're doing this wonderful thing. And then what happened was you can only use that money for education.
Yeah.
So she had like $7,000 left over. She was done school, and they would not give her money because it had to be used for education only. And so she's like, okay, well, I guess I might as well waste this and find something I want to learn about, even though I'm done school. I don't want to be in school. I have no interest, just to get my money. So just to clarify for Canadians out there, those educational funds, again, you need to really look into them and really find that fine print, because a lot of people get duped in that, thinking that, oh, it's their money, it's my money, you can't just keep it anyway. Well, apparently you can, because this literally happened to someone I know. Whereas if we get those beautiful policies as kids, that money can be used for anything, including the education. And it, like you said, the compounding interest. And I don't know about Canada. I haven't looked into it. So, you know, maybe I'll have to get a Canadian insurance broker to interview, but I'm going to guess the interest is better than the RESPs, because I know the RRSPs are pretty crappy when you look at the interest rates. So I'm going to say not only are you going to be able to access your money for anything you want, but you're probably making more money with it just sitting there. So,
and I'm not sure about your school accounts. Now, I know our 529 plans, very similar. You know, you'll get penalized. You can get your money back. So it's not like disability or long-term care where you cannot get it back at all. And actually, I believe it was January of this year that they made it to where you can roll it over if you have any left over into a Roth IRA. But again, you have to make under a certain amount of money in order to qualify for the Roth and all this stuff. So it's, you know, very specific. Otherwise, you'd be penalized in tax. And so that, I mean, the IUL really just, it eliminates all of those blockages, and you could just, there's so much more freedom in it. And if you take a look down the road of who invests in IULs, and essentially, like I was mentioning, the wealthy does, banks invest so much money into them. And that's because they don't do fractional banking. Whereas banks, why so many fail during the 07-08 crash, over 300 banks failed. And that's because they were all doing risky stuff. Whereas not a single life insurance company failed. And that's because they do not do fractional banking. They literally, you give them $1 and they keep $1 in their savings for you. So
yes,
better what it is at the banks, and it is actually guaranteed money, whereas the FDIC doesn't actually hold for you. Okay. That's an interesting.
yeah, and
I really do appreciate you on here. This has been a really great opportunity.
yeah. Sorry, my internet again is being a little bit. Somebody's internet is cutting in and out here, so I'm just going to give it a small minute and hope you come back. Okay, I think you're back. Sorry, please continue.
Yes.
The downsides of online.
I said my piece, and I was just basically thanking you for having me on here and giving me the opportunity to have a voice. And I look forward to seeing all your other videos that you have with people that come on here.
Yes, and just so for everyone, all the Americans out there, I know you live in your certain places and you have a shop and a brick and mortar and stuff like that, but let's say people call. Do you do online? Can people of other states contact you? Can any American get in touch with you?
Yes. So I have pretty much all my information on my social medias. I'm sure, like, I post a lot of my QR code, which is a digital business card. And I post that everywhere too. And that has a drop down of all things on how to reach out to me and how to learn about everything more. I am in numerous states nationwide, and it's very easy to get licensed in another state. I essentially just apply in 24 hours, boom, I can get it. So if I'm not in that state, I'm happy to be. It doesn't change the knowledge on any of the products. It just allows me to work in that particular state. But I'm already in about 9 or 10 different ones throughout the West Coast, to Texas, and then to the East Coast as well, up in Oregon. So kind of bouncing a little bit all over, just based off of whenever clients reach out to me.
Perfect.
But
they do not need to feel limited just because they're not close to you.
No. And Zoom is, or Google Meets, it's just a wonderful tool. So a lot of people don't want to actually come and meet me in my offices. They just like, I just don't want to even drive or do that. So.
Yep, I hear that. I am definitely slowly being one of those people too. What do you mean I have to leave my house? No, thank you. All right. I know we're going over time. Sorry, and we're breaking up again. I don't know. But I know we kind of went over time a bit, so I want to thank you for staying late. It has been incredibly informative. I hope everyone is learned so much. And yeah, I'll put all the information in the description for the video and in the Facebook and all the comments. And yeah, thank you so much for coming today and staying late. It's been super fun, and oddly, I love this topic, so it's been wonderful.
Well, you learned about it, and then you found you could get excited about it. So
yes,
thank you again so much.
Oh, you're welcome, and thank you for coming, and have a wonderful rest of your day.
Thank you. You as well.
Bye.